The United States government is seriously considering making US-based cryptocurrencies 100% tax-free. No capital gains, no taxable events, no IRS chasing you for every trade. Sounds impossible, right? Well, recent legislation, political momentum, and economic pressure are creating a perfect storm. And crypto taxes in America may be about to change forever. This, guys, is the biggest conversation in crypto policy right now, and it could transform your portfolio overnight. So let's dig into this. Let's get this straight right away. No, the United States has not made all crypto tax free yet, but proposals are absolutely on the table. And what lawmakers are discussing could be a complete reset of how crypto is taxed in America. Current reality: crypto is property. The IRS still treats crypto like stocks, real estate, and gold, meaning every time you sell, trade, or spend crypto, it's supposedly a taxable event. What if you earn crypto? What if you mine it, stake it, payroll? Taxable income. It's a system built for boomers trading IBM in 1994, not a 24/7 digital asset economy. But there are three major drivers that are currently pushing the US towards tax-free or reduced tax crypto. Competitiveness. Countries like the UAE, Singapore, Portugal, and Switzerland already offer zero crypto capital gains. Billions in US talent and capital are leaving because the government still taxes swapping ETH for USDC like a real estate sale. Number two, simplification. Buying coffee with crypto shouldn't require a 12-page tax form, and lawmakers agree. There's also some innovation pressure. The Genius Act, which passed in 2025, opened the door. If the government wants real-time digital settlement and tokenized finance, tax code modernization is the next logical step. So crypto isn't fringe anymore, guys. We know that. Banks are using it, governments can regulate it, and corporations are integrating it. So we need a tax system not designed in the 1970s. We need a 2025 tax and regulatory system that treats cryptocurrency accordingly. Because, guys, like it or not, we are moving towards a blockchain economy. So there are two major policy paths that could lead to tax-free crypto, or something very close. The Lummis Gillibrand bill, this is the big one. This proposal aims to treat small crypto transactions like foreign currency, exempt gains under $200 from tax, reduce reporting burdens, encourage consumer adoption. For everyday crypto users, this is massive. Imagine buying groceries, paying for gas, or sending money to a friend without triggering taxes. Number two, emerging crypto as money conversations. Behind closed doors, lawmakers are openly talking about exempting long-term crypto holdings, reducing or eliminating capital gains on crypto-to-crypto swaps, creating tax-free zones for stablecoins, incentivizing the use of US-based digital assets over foreign alternatives. Guys, nothing's guaranteed, but the political appetite is shifting. We've talked about it. President Trump has massive crypto bags. His sons have massive crypto bags. Robert Kiyosaki, you know him, massive, massive Bitcoin bags. Members of Congress, you know they have massive bags. And what do all the rich people have in common? What do they tell you? How do they keep their money? They don't pay taxes, right? They don't. So you know that when politicians want to change the tax liability on crypto, because they want to sell their crypto and not lose all their gains. Okay, don't get me wrong. It's going to benefit us. But you can bet, you can just put money down that these politicians have massive crypto bags and they do not want to pay taxes on their gains. So really, the greediness of Washington is coming back to help us as well. So what this means for us everyday investors, and this is where things get exciting. More profits, less friction. A tax-free environment could increase trading volume, boost our long-term returns, encourage capital formation, and attract global investment back into the United States. This also means US-based crypto will outperform. So if US-based coins like USDC, XRP, or future US stablecoins receive special tax treatment, it creates a massive competitive edge. Adoption could also go parabolic. Millions of people who avoid crypto because of taxes would suddenly enter the market, and Bitcoin and major altcoins could surge. Lower taxes equals more demand equals stronger price floors, which means volatility would also go down. Businesses would also go all in. Imagine, guys, massive companies like Google, Microsoft, Boeing. What if they put their payroll on crypto? Crypto remittances, crypto payments, crypto savings accounts, all would become frictionless. A tax shift like this isn't just a policy change. It is a giant market catalyst and something that we really need to keep our eyes on. So, where does all this leave us today? Here's the real state of things. Crypto is still taxed as property. Blanket tax-free crypto is not law. But US legislation is clearly evolving toward simplified rules, exemptions for small transactions, stronger consumer protections, and a more crypto-friendly tax code. The US is at an inflection point. The question is no longer if the tax code will adapt, but how soon. If the US moves towards a tax-free or tax-reduced crypto, it could spark the biggest American crypto boom we've ever seen. And for investors who position themselves early, the upside could be life-changing. So remember, guys, if you got some value out of this video, make sure you smash that subscribe button, leave me a comment below, and as always, stay focused and lock in. The world is about to be tokenized.